Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, share, all that good stuff. Tokenization is a hot topic. I wanted to speak with someone who's not a newcomer, but someone who's been deeply involved in this. I looked up Florian Spiegl, who is founder of Evident Capital. He's been in tokenization for about 7 or 8 years. We talked about how it's evolved, where it's at now, and what to expect in the coming year. Florian Spiegl, welcome to DigFin VOX.
Thanks for having me. Good to see you again, James.
Good to see you. And I'm excited to have this chat because you're one of the first people that I talked to about the subject of tokenization. Back when I was just getting DigFin off the ground, is about the same time you and your partners were getting your previous company, Finfabrik, off the ground. So you were really early in this space. You've been talking about tokenization, for many years now. So I thought what would be interesting is to maybe go back a little bit and look at the progress and the ideas of tokenization through your career, because you've been sort of working at this for so long. And I think that would give everybody a good sense of both the progress that has been made, which I think is substantial now, as well as the many hurdles that still remain to getting this into a proper industry. So if you don't mind, I'd like to actually go back before Finfabrik. You were doing digital work at Credit Suisse. So talk to us a little bit about what was going on in your mind sort of at the end of that part of your career as you're looking to set up Finfabrik. What was the world like? This is sort of like 2016, I think. And where, what were you thinking about in terms of applying? You had already been applying digital technology, but within a very traditional context. And so just what was going on in your head at that point?
Yeah, that's exactly right. And I still remember, by the way, when we did that early article back in the days, we're taking pictures on the balcony.
Yeah.
So that was fun.
I'm still doing the same thing. My phone's better. The photos are a little bit better, but the mechanics are pretty much still that.
I like that. It's a very personal approach, and that makes for, I think for the best reporting and stories. So on your question, back to Credit Suisse, essentially what I did at Credit Suisse at the end was what was called digital private banking. And part of that is we did a lot of research, and we had these conversations with private wealth clients. And I remember we were going through the results, and some of those results were, I think they changed my perspective. That's why I'm sharing it, where it was literally a client, an older gentleman actually, saying what they're missing as part of the service is that we cannot tell them essentially on their phone at any given point in time how rich they are, how much money they have. They want to sit in the car to the airport and check and see their number. And we knew we can't show them because especially Credit Suisse, like many banks, very inorganically grown for some time, a lot of systems in a way duct taped together, the typical bank story. And then it's difficult to build a really convincing digital proposition on top. So that was the corporate view of that. But overall, I saw, okay, fintech, and those were the fintech days, is going to change everything. And then this was probably the impetus for me to say, I'm gonna leave the corporate environment. I'm gonna set up my own shop and follow this opportunity. And you know this as well as I know. Those were in a way the heydays also of early fintech in Hong Kong, where a lot of things started, including the Fintech Association, which I was part of. And this is where we also started Finfabrik. And on the tokenization front, how that came in early on was really looking at where is the most significant white space. So where are the most significant inefficiencies, and where did we not see any change essentially? And that still is to this day more the asset management space than basically any other asset class. So if you look at asset management broadly or alternative assets more specifically, we haven't really seen much innovation, and it's way behind the curve of other segments in finance, I would say. And so that's how we set out. Yeah, and that was really the start of that journey for me in tokenization.
What part of asset management, when you talk about no innovation, so obviously funds themselves, quant funds, high frequency trading funds, a lot of hedge funds are using AI. They're using a lot of sophisticated tools in how they trade, a lot of digitization, electronification of those markets. And we've also seen the rise of some platforms that allow the breaking down of say private equity funds into smaller digestible amounts so that say wealthy families can start to get access to these things. So we are seeing sort of some changes there. And of course, in the fund space for a while, I guess the big change was really the ETF and the rise of the of exchange traded products. So it's not that there's not been no innovation, um, but the fee structure, the way that the culture of the asset management industry, that certainly is the same as far as I can tell. I've been covering asset management since a very long time. So where are the points that you see the least movement or where there's the greatest inefficiencies?
Yeah, so we've definitely seen a lot of innovation on the product front, and also a lot of use of technology. So what I'm referring to is more how is the structure managed, the administration of that structure, and then how do you distribute that as an investment product? So how does distribution work, and what holds all of that together?
Mhm.
And we haven't really seen much innovation there. This is still largely, in worst case, paper based, right?
Yeah.
If you invest in a fund, there's still subscription documents, and a lot of them are paper based, or the next best version, which is just the same documents in PDF, but in my mind, not much better. But that limits, in a way, the access to that asset class, and that also drives costs of running these assets, and that just, in my mind, stifles innovation. So where tokenization comes in, and because the question is also why do you need tokenization, is really there, is running these structures much more efficiently, which then allows you to provide broader access to that asset class. Of course, you have other benefits as well, such as transparency. But for me, in the end, it's about these two things: efficiency and then distribution. So opening up this asset class to more investors. As you said, there certainly has been progress, especially on essentially creating feeder fund vehicles that pool capital and then participate in the underlying funds. But to your point, this is still limited, I think, to a pretty rarefied group in the grand scheme of things. And in the end, these assets, in my mind, should be accessible to the average investor, really. Everyone should have that in their portfolio.
Where do you see that compression of efficiency coming from? Like, who are the benefits? Who will benefit the most? Who stands to lose the most business if this wave of tokenization makes itself felt?
So the parties that will benefit the most are the investors. Is you and I getting access to more interesting assets, as we should, and being able to build truly diversified portfolios, which today, let's be honest, is not really possible for most investors. So that's very clearly the side of the people who benefit. The losers will be the many intermediaries that are in the middle today. You have many steps, actually, if you think about the distribution side, especially global distribution of, let's say, an alternative assets product or a single asset, that, again, they slow things down, increase the costs with every step. And this is just not how things should work and have to work anymore today. So, if I were a fund admin, for example, today, I would think hard about how can I build efficiencies? What is the role of digitalization here? In my mind, elements like fund administration, fund accounting are basically rules and math. So they lend themselves very well to digitalization in a broader sense, and specifically to smart contracts where there's no room for interpretation, really, and actually no room for error either. So it's, in my mind, not ideal for humans. It's boring work. We make mistakes. We're messy. It's much better for machines to do that. And this, I feel, is where things are clearly headed.
Is it necessary to use blockchain-based technology to enable those changes?
No, not for the first steps, as we've seen. You have these platforms that are essentially fund aggregators and enable investment into, say, PE funds, for example, very successfully. But if you think a little bit further into the future, if you want to build truly global markets and also work on liquidity, for example, in these markets, it's just a more efficient approach to use blockchain for that. One reason for that is it's a very efficient system of record. And so keeping records in an immutable way and in a way that is independently verifiable matters a lot in this, especially if you talk about efficiency. So if you take an auditor, the audit partners that we work with, for them, they can see doing this much more efficiently at lower cost because it's higher quality, standardized data across the entire life cycle of the asset. Now you can cover certain elements of that, of course, in a fast centralized database. And we looked at this, when evidence started, it was completely open, despite my history with everything. We said, okay, let's look at what is the best technical approach. So if you take everything into account, from creating the asset, managing it, its life cycle, to distributing it, and then managing a secondary market or transactions in this asset, a blockchain is the ideal technology for that. And I think this will be one of the use cases that really matter and make a difference, also because it's applied to an already sizable traditional industry. And in the end, it's a modern infrastructure that we bring to that industry.
Yeah. Let's go back a little bit before we get into some of that nitty-gritty.
Yeah.
What were the lessons that you learned at Finfabrik? Obviously a startup, early, maybe a little too early. But talk us through a little bit of, give us a couple war stories there and what you learned and what was your thinking when you decided to transition to a new business?
Well, so many lessons. We need 3 podcasts for that, and primarily on the personal level, right? Lessons that you learn as a leader, and the mistakes you make, and the strategic confusions that you have. And but the upside of that is you take that and you apply it to the next thing as an entrepreneur, and hopefully you do better the next time around. So I think specifically in this context of our conversation, also at Evident, certainly timing is very important. And your idea, your technology doesn't matter. No one cares, in fact, if you have wrong timing, because then it's just a fancy technology that has no use case and doesn't solve any problem that people are willing to pay for getting solved. Right. And that was certainly the case for us. And then just from an entrepreneur's perspective, if you're building something that is really changing things on an infrastructure level, you need to have time. You need to have time to be eventually right. And so that was another challenge where we had to shift also our business model and do different things to generate revenue. Where in hindsight, if you had just stuck with the original ideas, some of the ones that we worked on, that would have been much better. So yeah, you learn from that. Evident has a multi-year runway, because I know we want to be strategic about this. Especially in times like these, you want to be very calm and relaxed and just follow your path. Don't change the vision, the mission, maybe pivot on the implementation of it. And that's certainly very different how I do things today. But overall, maybe as a last comment on that, that was a very rewarding journey, particularly for the people that I worked with there, and the things you learn, the memories you keep. I wouldn't want to miss it. And it's been the foundation of what we do today. A lot of the ideas, the conversations, as you know, are now becoming a reality. So, what's different today certainly is the environment and the institutional demand for this type of solutions.
Yeah. So what's the kind of the thesis for Evident, and what makes it different than what you've been doing before?
Well, Evident at its core is an investment platform for alternative assets. So we've been in a licensing process with the SFC, and I think we're pretty close there. So that we can also actively distribute and place assets with investors. So we can be that, in essence, broker-dealer type of market participant. And before that, we are also essentially an infrastructure. We are a tokenization on-ramp that creates a digital representation of rights of assets, and then allows the issuer of these assets to more efficiently reach their own investor network. So purely as an infrastructure play. And we're adding a distribution side that will be 2024 for us. So the end of this year and beginning of next year, we will launch into really publicly also making these assets accessible to a broader group of investors, and then live up to that mission of really building more global capital bridges in the alternative asset space. Because as we all know, this today exists very much in closed off circles and networks, a lot on WeChat, WhatsApp, email groups, the usual. So I think it's an opportunity to open that up and make that more transparent, really lift it on a digital level, like we've seen with e-commerce, frankly. I think there's a great opportunity there.
When we talk about blockchain, are we talking about permissioned or permissionless? We're talking about public or private? What's going to work for the tokenization world?
It's a great question, and it was connecting back to your question earlier. Was one of the I wouldn't say confusions, but one of the directions we took in my last company, where we were looking primarily into permissioned and private blockchain systems. But in the end, that's just a different type
basically. Yeah,
exactly. It's just a different kind of database, and you lose a lot of the benefits, in my view, and the long-term benefits. I still believe in this element of decentralization in the sense of taking out middlemen, and you only get that in permissionless public infrastructure. So I'm very strong beliefs on that. So from the beginning, as we started building, we built on permissionless and open systems, and already now we're seeing the partnerships that we're forming. It's this element, this argument of composability, where others can very easily connect to what we built, and then that allows us to grow faster in the end, forming these partnerships.
All the banks are working on their own tokenization platforms. I believe these are still their own walled gardens, essentially, at least today. So if we're talking about real world assets and we're talking about financial institutions, what has to happen for, I guess, your counterparties, banks, asset managers, to be willing to play in the public blockchain space, either where they don't control it, they're in the mix with other participants, which of course is good for liquidity, but in sense of that, the fears, legitimate fears they have around being able to be compliant, and also to, from their own point of view, to make sure that they're also making money.
Yeah, I think it's exactly that. We need to see the use cases emerge where essentially the business case is compelling for large institutions to operate in open ecosystems. But to me, this is just a question of time. These things, and we've seen the frenzy in crypto. I think everything moved very fast, too fast, and a lot of speculation, which is normal and healthy in my view, in this kind of development. But as we go into broader distribution, into what you could call institutional recomposition, where institutions are starting to get into this, the regulators are catching up to it, things inevitably slow down, and that's a good thing. And so this will take time, but to me, the direction of travel is very clear. There will be much more benefit of breaking down those walled gardens, at least in certain areas, and collaborate with others and build more global markets, particularly if you think about the alternative asset space. Then there will be downsides, and then that equation will shift. Right now, we're not there yet, so it's just still better and easier and more familiar, and probably from a business model better to just follow the old approach and maybe put in some modern technology. But you do see players, take JP Morgan, for example, talk a lot about the opportunity in tokenizing real world assets for exactly that, for essentially creating much more well-diversified portfolios, doing this much more efficiently. And in the end, to me, that also means, being open and connecting with others to really get the full benefit of that.
Sometimes both in terms of the product set, as well as, I guess, the marketplace, the ecosystem, primary, secondary markets. I feel like with this sort of change that people are talking about, we seem to veer between boiling the ocean, which is maybe some of the problems you had in your first go at this, where you're trying to do change everything all at once,
Exactly.
because you need to have everything kind of change for the benefits really to kick in, right?
Yeah.
At the same time, maybe it's go very niche and find a particular use case, either a particular product or a particular set of people, and then start small, but just make it work.
Yeah.
Where are we between that? I mean, what it feels like when I talk to people, I feel like I'm still veering between these extremes in terms of go-to-market strategy, and neither one of them is yet to click.
Yeah, absolutely. And there is this challenge that you think you have to replace all the parts for the whole thing to make sense. But to me, that never works because you can't, things will continue to evolve and change. So you can't replace everything at once, especially not as a small young player. Doesn't work. So it's all about identifying the niche, as you said, that you can create an end-to-end new solution, and then grow from there, expand from there. So in our case, it has been really working with mid-sized issuers, working with professional investors only, high net worth individuals, family offices on the investor side, and not thinking about retail or broader access yet, because again, hypothesis that this will happen automatically over time anyways. Plus, it is primarily a regulatory question. In my view, it's a technology-wise, product-wise, issuer appetite-wise, we're already there. But the proper frameworks need to follow for that. And I understand, also regulators, they need to take it step by step. And in the grand scheme of things, we will see that happening. But you need to start with something that is compelling end to end, but is probably not the biggest, the all-encompassing use case, and then just expand from there.
And be able to keep that runway
Yeah.
from closing in on you too
Well,
soon.
it's closing in every day.
Yeah.
Every day it's a little less, but we've made revenue, and we have a very healthy pipeline as well. So I'm quite confident on that. But yeah, you don't want to be nervous about that runway getting shorter, because that doesn't help with being strategic and sticking with it. And again, step by step, growing that footprint.
How, since maybe you've started with Evident, how have you seen differences or changes in the relationship between, let's say, the unregulated crypto space, crypto native, versus the, let's say, if the DLT tokenization, bringing in the TradFi element? Are these still chalk and cheese, or are we seeing these two things, which often seem to talk in parallel, completely separately? Are we seeing some kind of convergence between these two worlds?
Yeah, so it depends on who you ask. If you ask me, we'll see a convergence. That has been my experience. And we see it from both sides, which is, I feel, the interesting aspect of it. If you take the TradFi side, there's great interest in adopting innovation that came out of this lab, or speculative lab, that we saw in crypto for a long time with, again, in the nature of an experimental lab, 99% of things maybe not having long-term value, but they needed to be tried to find out. But there is some things in there that actually make sense. If you think about certain elements of decentralization, for example, settling trades, right? If you take out all the parties in the middle, you settle peer-to-peer, wallet to wallet. That's something that we have built into our platform already. And so you have real-time settlement of transactions in alternative assets. And that goes back to what the innovation in the crypto space. You take ideas around identity and how we manage identity. For me, that's the next big topic, where again, major innovation will come out of the broader crypto Web3 space, that in the end, I think there will be value in this being adopted in the TradFi area. It makes no sense that my bank should hold my passport picture forever and has all these data about me, when I can manage this myself and I just disclose it on an as needed basis.
Yeah.
I think this no one will say this is nonsense. So if you take the other side of this, the interest that we've seen from the crypto space is in product, because a lot of the asset prices were driven by speculation. Again, totally normal, totally needed to attract that speculative capital, but that phase is over. So if you look at DeFi lending, for example, today, there's a great interest in real world assets, because I look at the columns on DeFi lending overviews. There's a huge amount of liquidations there. So it doesn't speak to the asset quality. And the assets that we work on, I know that they are much higher quality than that. They would fit perfectly to models like DeFi lending in my mind. These are income producing assets. They have decent APYs, so that expectation also has come down, of course. And so I think real world assets as a product in the crypto space is something that certainly is driving some interest. And then, I think that will continue. You will see this conversion. But if you think about DeFi, also because of regulatory reasons, at least for the foreseeable future, it will run in its own parallel world, because it's very hard to integrate that in a licensed setup and still run, a proper DeFi platform.
It seems to me philosophically, the big change, Florian, is that if you're a bank, you are used to dealing with basically product silos and accounts. I can go to that bank and I might be a savings account or a checking account, or I might be a lending client, but it's a different account. Whereas with a wallet, you should, in theory, be able to take that wallet to multiple institutions. It can handle multiple types of assets, and that's you, right? So how do you see, so I think we can all see as users and as as entrepreneurs, you can see the benefit of a wallet system, why people would like that, provided that that digital ID side works. But from the bank, which is so used to an account-based system, do you see them being able to manage this transition, maybe operate in parallel for a while if that's the way it's going to be? Or is this something they can actually handle quite simply and they're on top of it, or will this be a challenge for them?
Well, change on that large scale is always a challenge, but absolutely that can be handled. And I can take again Evident as an example how we already do this today. So our wallets, you can choose to have a non-custodial wallet on Evident. So again, we give you all the warnings. We cannot help you if you lose the private keys, but that's your wallet. Of course, we know that this is your wallet, so we can always connect it to your identity as a user. But why? So why don't you just keep your wallet and close your account with Evident? Well, we have to work very hard to provide value-adding services. For example, if you invest into an asset that is income producing, we take care of the monthly dividend or whatever it is actually arriving in your wallet reliably every time. Or that you see your portfolio, you can track how you're doing with your investments. These are services we provide so that users want to have an account on our platform. So we don't try to lock them in and say, oh, if you want any of this, you need to have this account or this wallet with us, and this is ours. I think, again, and that's part of the DeFi spirit to some extent, or decentralization, that my assets are my assets as a user. I should have control over it. And there's still a significant role of centralized parties like a bank to play, because in the end, I trust that counterparty, right? I don't necessarily believe in completely trustless systems for everything in finance. I think fundamentally as human beings, we want to have a trusted counterparty, and that role, will still be largely fulfilled by institutions. And so it's really rethinking the service model much more than completely changing everything. But we'll see these elements, I think, of let's say decentralization being adopted where it makes sense and where the end user prefers it.
Yeah. So last question for you, Florian, before we wrap up. We talked a little bit about runway. You said you're making sure that you don't have to lose sleep over that particular question. So what's the funding right now for your business? Will you be needing to tap the markets through either tokenization, ICO stuff, or through VC, or just what's the outlook for you guys?
So as a platform, we're very traditional. So we did essentially a pre-seed round, but I think a sizable pre-seed round that gave us that multi-year runway, and most of the money is still in the bank. So the next fundraise will be traditional, so not on a token, because that's just the nature of our platform. And it will be more about strategic partners. So the partners that we work with in the traditional finance side, that ideally are also then stakeholders in the company. So it's a lot more about who's on your cap table, who is that group, than about the capital side of it. But for us, yeah, of course, you always watch runway and you do your budgets, you plan out. The company's growing, So that's probably a topic for us around end of next year, beginning of 25, to look into that. Also, because the macro environment I expect will be a better one again in the, let's say, VC space, with rates coming down mid next year and next year latest, I think. So it will be a better time as well.
Okay, good. Well, let's we'll have to circle back end of 24 to see how it's all played out. But in the meantime, Florian, delighted to have you. Thank you so much for joining me on DigFin VOX.
Thanks for having me again.